Good evening, everybody. It's starting to get hot enough in Pittsburgh to be ready for raining at the lake. Always a nice cool breeze coming across the water. So we still have people needing things clarified. Send me your phone and we'll go through the details. Okay, whoops, that's not the one I want. Here's what's the nice aspect of this J-hook pattern. First of all, the J-hook pattern in itself would tell us we probably got a wave 1, wave 2. Now look at our bullish flutter kicker type signal or bullish doji sandwich. J-hook pattern telling us we're heading higher, which becomes much more relevant when we're looking at the overall market trend of longer term. Big up move, sideways for 18 months. Now this is relevant right here, that we've now broken out into that new territory after kind of hitting the resistance level here a couple of times. So that in itself allows us to be a little bit more aggressive with the prospects of, if this is wave 3, that provides for a good spot to be putting on positions, and for even the short term, and for the longer term, we might be in a strong uptrend. So I always see the questions of why are they buying this market? And that's kind of an irrelevant question. All we want to know is that they are buying this market and being able to identify the strength of the patterns that tell us there's more to come. Kind of the same scenario right here on the Dow, especially when they did a left-right combo, gap up through the resistance level, and nothing yet to show that there's any severe selling pressure. Same scenario on the S&P 500. There's your left-right combo, breaking out a J-hook pattern into new territory. Stochastics, all they do is tell us it's overbought, but as you can see right here, it remained overbought for 3 weeks. This may, remember, we're looking for a sell signal in the overbought area. So currently we don't have any sell signals. So we might be in an overbought area for weeks, maybe months. It's the sell signal that becomes the relevant signal. Okay, looking real quick at the crude oil. Backing off a little bit, but kind of in a steady range. Gold. Looks like it's setting up for another breakout to the upside if they can break it out. I look at the grains. The grains aren't moving in any great direction. Cattle, slow uptrend. Notice how it almost came back, or I guess you would pretty much calculate that as being, but they came back and used the T-line as support. And I always look at hogs because they've been moving around a lot, except now. Silver, moving up. This is the August contract. So this is what you kind of watch for, is to see what type of signals you have coming out of resistance levels. It's trading after hours up here, so that might mean silver. We'll get to those stocks as we go through this. Okay, so going back to just the aspect that we're in a nice steady uptrend, meaning wave 1, wave 2, wave 3, and we're breaking out into new territory. You got to remember what the psychology would be for investors across the world and investors that have only been paying half attention to the markets or no attention to the markets. When they start seeing every night that the markets are hitting new record highs, what is the normal reaction? Well, normal reaction is, man, if the market's hitting new highs and I'm not in it, I better start thinking about putting some money in the market, which is usually the backwards analysis and that's why the Japanese rice traders have identified that most people buy at the top. So if this market keeps moving for the next week or two higher, that means everybody else will start piling in. Instead of when the market's down here, everybody's hearing all the reasons not to be in the market, so they don't get in until they hear all the reasons why they should be in the market. So because of that, we have the benefit of simple scanning techniques to find the best possible trades. That's why we recommended KPTI today. You had a bullish engulfing signal right here at the T-line. Positive trading would tell us a J-hook pattern would be in progress. Same scenario on a recommendation of VC. You can see what the price movement is. Wave 1, wave 2. Look at our Morningstar signal followed by a Doji sandwich or McMuffin. Pretty much telling us that we could be in wave 3, which would be the same magnitude as this right here. Now, once you are able to identify this, and I'm going to start this session out by saying there's there's probably 18, 20 chart patterns, signals patterns that are excellent probabilities of being in the right trade at the right time. But what we really want to be able to do is master those signals and patterns. So I'm going to reaffirm our pushing on the fact that start out by learning just 4 or 5 and learn it extremely well. You'll never run out of trades, and you'll have control. Once you master what things should be doing at certain points, you now control your investing versus being at the whim of somebody else's advice or flopping around from pattern to pattern, not really knowing what the all the fine-tuned elements of that pattern will be. So if you learn a few extremely well, your compounding effect will be fantastic. So VC, J-hook pattern. Notice what it did today. It traded down lower most of the day, came back up. What happens if it opens positive tomorrow after the doji with stochastics coming up, forming a J-hook pattern? You want to be buying immediately. Sabre, another one that had a Morningstar signal, and it's right here at a breakout level. So this is what we, how to use multiple time frames. You can. What was the last one we just? VC. VC? Was it VC? If I was going to be aggressive today, we already know we've got a buy signal with stochastics coming up, but it sells off. But what is our analysis of this chart pattern that we should be heading higher. So let's say it backs off down here, but we already assume that we're in an uptrend. If I want to be aggressive, I flip to the 10-minute chart. Maybe I buy here, or maybe I buy here. Because the selling is done, back down to the bottoms, they start bringing it back up. So if I wanted to be even a little bit more nimble, I go to the 5-minute chart. See what the 5-minute chart is telling me. So anyways, that's how you use your entry strategy. Now, that same scenario would be used if you were trading soybeans. Trying to find something. Here's your 5-minute chart, 10-minute chart. There's your fry pan bottom. So remember, the candlestick charts look exactly the same on a 10-minute chart time frame as they do on a daily time frame. And the reason for that is just the simple definition of a candlestick signal, which is the accumulative knowledge of everybody buying and selling during a specific time frame. Doesn't matter whether that time frame is 1 minute or 1 month. So if I went back to today's trading and I looked at my 10-minute chart, look what it did all day. Let's make this more pronounced. And nothing. What? No, coming back up. And it's starting to come back up. What do I see setting up? Kind of a fry pan bottom on my 10-minute chart. So anyways, knowing that our overall market trend should be going in wave 3 of a J-hook pattern, that gives us a little bit more confidence to be buying the charts that are showing good patterns. Our recommendation last week on MDR was based upon the bullish engulfing, bah humbug, wobble breakout, now a 45-degree. And what has kind of kept me in trades ever since we discovered the T-line was basically, if you see a buy signal, you stay long as it doesn't close below the T-line. Now, why was this more compelling? Because there's one of your strongest reversal signals, the best friend signal. What's it doing now? Aren't we aware of a gap up in the overbought condition? Start looking for sell signals. That is true, other than the fact we're not in the overbought condition. So essentially, we got a fry pan bottom breakout. Where do you think your first target is going to be? So this is all just very simple analysis based upon knowing what human nature does to create chart setups. Oh, why do I have this on here? Because I typed in the wrong symbol. It was AGCO, that's why. There you go, wave 1. And notice how wave 1 started. There's your left-right combo gap up. There's kind of your bearish, your shooting star, your doji, bearish trading. There's where you'd close it out. Now this is where you'd start buying it back. Not today, because what's our criteria for an entry strategy? Very simple. We see a candlestick buy signal. What do we want to see to confirm that signal? More buying. The fact that they opened it down here, let me make this bigger, and traded lower, what does that tell us about the strength of the buyers? They weren't there. However, what do we got for the strength of a reversal signal? Big inverted hammer, doji, gap up. So what do we expect? Or what should we be expecting? More buying. Where would be a good place to confirm the bulls are still in control? Well, if they came back up through this level, telling us Wave 1, Wave 2, Wave 3 was now in progress. So, knowing that the market's in an uptrend allows us to be in positions. Look at the left-right combo on OLED right here at the T-line. Was the T-line a factor? Yeah, there was a bullish Harami back here. They haven't been able to close this below the T-line. Excuse me. You just stay long. Kind of the same thing as what our scenario was on Crocs. Once we saw the buy signal, all you had to do was stay long. That gets that anxiety, not anxiety, but normal human nature out of our trading. Oops. It tells us whether the uptrend remains in progress, number one. And number two, it allows us to take profits when we're too far away from the T-line and allows us to get back in. And it also allows us to add to our confirming indication that if you're in an uptrend, what type of setup do you have going on? Well, if you can pretty much draw parallel lines, I'm going to assume you're in a trend channel, that you now at least can calculate where your next target will be. So, I always like to add in here that this is not rocket science. This is just being able to identify the patterns that we see over and over again based upon human nature. Not we, but the Japanese race traders have pointed out to us. ADI, we can see pretty much what's going on here. An uptrend that could never get back below the T-line. Now, if we have a bullish open tomorrow, where's our next target? Probably at least to the top of this channel. And that puts us in situations where if we're buying calls right here, if we're using our strategy as a trend channel, we know we've got a high probability setup here for buying calls, knowing where our upside target is. If we've got a steady eddy, stay has been acting well. Stone. This is what we call our double doji setup. You can see how they came out of the fry pan bottom. You can see how they've pulled back for a couple of days with a indecisive trading day, a doji. If they open this positive tomorrow, what's it telling us? The profit taking's over, the uptrend's still in progress. So I always recommend to people, you don't have to know each signal and pattern, what do I say, extensively. You just have to kind of recognize what could happen. You might not be an expert. Maybe you were an expert on, or decided you were going to become an expert on the fry pan bottom. Now you want to know what other things occur in that trend to tell you the uptrend is still in progress or whether it has ended. SSYS. We can see what's happening here. Here's a wedge. We're right at the breakout. We're with a doji. If this opens positive, what do we have going on? Wave 1, J-hook pattern wave 2 going into wave 3. Micron, these are all the ones that we're participating in right now. Notice your kicker signal. Notice your J-hook pattern. Stay long. You're in the overbought area. Now, what's the other rational trend process? Doji in the overbought area. Where's the safest place to put a stop? Just below the low of that doji. Because if it comes back down through there, what do we know that the Japanese race traders tell us? If you see a doji in the overbought condition, get ready to take profits. If it opens positive and trades positive, nothing's happened. You're still in the uptrend. AXGT, double doji. If this opens positive after your fry pan bottom, kind of a bobble breakout, you want to be buying immediately. Atos. After the fry pan bottom breakout, what are we looking for? You still can't close, haven't seen it close below the T line. So we know that if it trades lower, we close it out. If it trades higher, that's our breakout that we're looking for. So I'm just kind of going through the ones that we're already in just because now we're at levels PI, and it came out of this fry pan bottom. Notice how they got out of this fry pan bottom. They gapped up through the beginning of this pattern. What's that basically tell you? They didn't care that this might be a resistance level. They went right through it. Now we've got a shooting star doji. Same scenario. Let's put a stop down here somewhere that if it came in that direction, we pretty much calculate that a doji in the overbought area is now producing a reversal signal. J-hook pattern on Nava Gold. Some other gold stocks working well. KL. If this opens positive tomorrow, there's another J-hook pattern setting up. SA. Another J-hook pattern setting up. So if you like golds, at least you get a glimpse of what might be happening in gold prices before the market opens. If gold all of a sudden is trading up here tomorrow, at least you know the buyers are in there. Now you go back to your gold stocks and say, all right, we're anticipating this is opening higher. It's confirming our pattern. So you're just basically putting all your stars in alignment. All right. So there's some that are starting to get iffy. For example, there was our potential classic fry pan bottom J-hook pattern. Except today it closed right on the T-line. What's this allow us to kind of evaluate? Well, if they open this lower tomorrow, what's happened to the J-hook pattern trajectory? Disappeared. You close it out. SPWR was a good trade until, notice our J-hook pattern. Then what happened? There was our doji spinning top, left-right combo. Remember, the left-right combo is one of the strongest reversal signals. That when you see a left-right combo, if I was long this position, I'd probably have closed out at least half of it here. If it opened positive, traded positive, all right, I've still got a high-risk, profitable trade on half the position. If it trades lower, I close out the other half. I've got most of that profit out of that trade. Oh, I haven't traded coffee in, let's see, F.AC. Nope, F.CF. Coffee did a big bullish engulfing left-right combo. Anything else that you can kind of extrapolate on this analysis? That's my big word, extrapolate. You can draw a trend channel and up through here. Parallel up through there. This opens positive. There's my next target. So always get the question. So the signals work well on futures or currencies. You got to remember, candlestick signals were developed by Japanese rice traders, trading the most basic of all commodities in the world, rice. which doesn't move around very fast. But I always point out that the Japanese rice traders did not become wealthy. They became legendarily wealthy. They were the financial powerhouse in Japan for centuries. So here's Yeti. What was our warning? There was our hanging man, bearish engulfing. Simply put your sell stop right here. If it opened positive and traded positive, you're all right. But if it came back down through here after a sell signal, where do you think your next likely target was going to be? The T-line. MAXR. So what do you do with this one? You got a bearish engulfing signal. Not quite a left-right combo, but a bearish engulfing signal. Stochastics up toward the higher end of the range. So what's our criteria for this one? It has to open positive and trade positive to stay in it. Bob, hold on to your individual ones until we get to where I tell Jim to do the double line. Otherwise, I'll get so confused and I'll start babbling like I normally do. So we know the oil stocks are selling off. So here's ESV, which was good right up until it got to the 50-day moving average and did a bearish engulfing signal. Now it's kind of done a quasi-doji sandwich. Where do you think the next likely target could be? First of all, right here. Secondly, they could be coming down even further. So if you want to have a short position in your portfolio, even with the markets way up here in the overbought area, you add one or two short positions, whether it's that one or what can we see on Whiting. Where's our bearish doji sandwich? Where's our next logical target? Maybe down in this area. Okay, whoops, I didn't do the biggies yet. So the big traders like AMD, you can see the type of pattern setup. Fry pan bottom, little J-hook pattern. If this opens positive tomorrow, what's it telling you? Next wave is in progress. Tesla, I was telling the options room today, I'm just kicking myself because we knew what was happening when you came out of this T-line crunch, bobble breakout. There was going to be more upside. Where do you think your next target is? Up here. Why? Because that's where everybody else is watching. Wynn Resorts. Look at the little scoop type pattern. Where do you think this one's heading to? Right back up to the top of the channel. Could give you a good strong run. Alcoa, another institutional trader. If this opened positive tomorrow, what do you got going on? There's your bobble breakout. You could be buying this one. Where's your next potential target? Up here to the 50 or the 200-day moving average. We've got call strategies on Roku. There's a left-right combo followed by a doji sandwich. Today it needed to stay above the T-line, which it eventually did. Started coming back strong. So what could happen here? If the trade's positive. We got a wave 1, wave 2, wave 3 should break us out through that level, putting us back into a situation where you might have that type of price move. Apple is kind of the lethargic one, but it's also at a breakout level. If this trade's positive, you could be buying Apple based upon its little J-hook pattern. Up until today, it was kind of bleh. But the fact that they added this candlestick to it, or candlestick formation, now you've got a much more clear evaluation of who's in control, the bulls or the bears. Obviously, the bulls have stepped in. Still holding on to NVIDIA. With the buying right here in the 50, we're still anticipating they can take this up to the 50 or the 200-day moving average. Whoops. Labu is telling you that that sector is kind of That tells you want to stay out of that sector. Nugget. Tells you it's still in a slow uptrend. Also, a potential breakout if gold starts moving higher and puts you in wave 3. So the reason I'm pointing this out is I wouldn't be trading Nugget right now, but if it breaks out through this level, that's telling me that sector's now got good strength to it. That's the sector that I could add a few positions to. Disney, reason we have this one is because look at your breakout area. Now you had a gap up through that area. This is the identification of a wave 1, wave 2. Now you're in new high territory, wave 3. And that's the reason you want to keep track of that type of thing. It's very simple. Because everybody else is seeing that it's broken out, that there's now a change or new perspective as far as investor sentiment. Netflix is a good example of if you see a trade and it closes below the T-line, let's make this bigger, close it out. Because whenever they close below the T-line, the probabilities become greatly enhanced that they're selling it off. So I've learned to close it out because I've discovered every time I've held on right here that, oh man, maybe it's in an uptrend, maybe they'll open a positive. 90% of the time, I'm wrong. And I don't want to be fighting the probabilities. Okay, so those were the good ones as far as the ones we're holding. There's Marvell. You can see that little fry pan bottom breakout. You stay long on this one. ANF, Abercrombie Fitch, where do you think the next target is? Back up where this gap down. If it breaks through there, now you've got running room up in the gap area. Now, the reason I watch the fry pan bottoms is because we know what the results should be. It's usually a very strong price move. And so if I know that this breaks out and I'm buying, my next criteria is very simple. I stay with it as long as it stays above the T-line. I get ready to close it out. If it doesn't work, if tomorrow it opened positive and I bought it and then it closed back below the T-line, that's not a fry pan bottom breakout. I want to get back out of it right away. Oh, whoops, I did that wrong. Here, Zio. That's a good fry pan bottom breakout. Where do you think the next target is? At least right here, then right here, which would kind of coincide with the 200-day moving average. IONS, fry pan bottom. Why is this relevant? Because everybody and their brother is watching to see whether it's going to break out through the 50. We've got added evidence that it's a strong move because we can see the fry pan bottom and it has broken out through the 50 to confirm that fry pan bottom. That becomes a very good setup. This becomes a very good setup. Kind of your fry pan bottoms. There's your little slow curve. There's your breakout. There's your doji sitting right here on the 50. And what do we know about the doji rule? If it opens positive, what do we got going on? A doji sandwich breakout. Okay. So this becomes an excellent buy on positive trading tomorrow. Fry pan bottom on glue. This one will probably be recommended tomorrow. ALKS. Because notice what type of signal happened right in here. You kind of see this fry pan bottom. Now you've got a gap up above a dark candle. So you're getting ready for a bullish flutter kicker. So if this opens positive, what do you got? You got a fry pan bottom, breakout through the 50 with a bullish flutter kicker. That's a very strong evidence of a strong price move. And this is what usually happens. There's your fry pan bottom. There's your kind of your classic or cup and handle. You can be buying this one. Where do you think your next target is? Up here, fill in the gap. So the visual aspects of candlesticks allow us to identify not only where the strong patterns are starting, but where the potential targets are, like the top of a trend. Zoom, slow curve, I would suspect it's heading back to the top of the trend channel. And hold on, I can't read my own handwriting. Whoops, I missed APEI, J-hook pattern, ERVS, J-hook pattern, SMEGMO, J-hook pattern, classic. So the reason you want to identify your patterns is twofold. One, it's going to produce a high probability trade, and two, it's going to produce a much greater return, because if the market is slowly trending up, a lot of stocks will slowly trend up. If we can recognize a pattern, we can pretty much calculate what the upside potential is on wave 3. And CDMO, wave 1, wave 2. Look at your little morning star type signal, but it would pretty much tell you if they open this one positive, you're now breaking out into wave 3. Nah, not this one. Seagate. There's your J-hook pattern with a kind of a kicker type gap up. So there's plenty of good trade setups, with the backdrop being that this market may start heading into much higher new highs. There's your best friend signal. There's your first target. Yeah, the 80-20 is, if you're above 80, it's overbought. If you're below 20, it's oversold. Then your stochastics buying are 12-3-3. Now I've lost my place. Pets, okay. And PRBV, this one's interesting, because if it does get moving and possibly come back up to here, look at the magnitude of return. That's going to be about an 80% upside if they break this out and they start to buy. And remember, something change the investor sentiment. Now if the consolidation is over, oh man, that cat is upstairs just screeching. This is what we're looking for coming out of these classic patterns. That's Kara. So that's why things like XLNX, looking for out of your fry pan bottom classic pattern. ADI, same scenario. More pronounced, kind of a fry pan bottom, J-hook type pattern. So again, recognizing just the classic allows you to have a set of trade setups that are going to produce high probability trades. Now, when you know you've got a high probability trade setup, it makes it much more effective. Now, let's say you're either buying the stock, knowing when to be buying, and or option strategies, whether you want to be buying calls outright or a call spread. It just allows you to have a much more control over your own trading than just trying to do all of them. So you can see the bobble breakout on TSEM. Wave 1, wave 3 should bring you back up here. Now, is that a big, huge percentage move? No, 2 points on $17 stock. That's I can figure this out. That's about a 15% move. But let's say you were buying the 1750s and selling the 19s. That might be a 90% upside potential on a call strategy. Or you're buying the golds. So we can pick out different sectors. And that all kind of falls into that category of what are the 4 signals or patterns, or do I concentrate on which sectors are moving? So when you get all this into your head, now your analysis isn't all the outside information. It's knowing. So somebody always asks, well, what's the Fed announcement going to do to the markets? Doesn't really matter. What we're analyzing is what did the Fed announcements do to the markets. So instead of trying to anticipate, we want to take advantage of what actually happens based upon investor sentiment. Okay. I guess that's about all I got for tonight. If you're going to short something like ESV. The long positions got a clear J-hook pattern with a doji best friend gap up on ATEN. ALKS, another one, if it opens positive, doing a bullish flutter kicker breakout, got some big upside potential. Okay, any general questions on candlesticks? Any concern, D-agent, high up above the T-line? Not really, because remember, it might give you some pause, but right now I'd be looking for a positive open doji sandwich, which would be further confirming, more importantly, the fact that we're in a J-hook pattern. Where we are in stochastics is less important, and where we are as far as our distance from the T-line is less important. Now, it's considerations, but remember, we're still buying based upon the pattern that it's producing. Thursday, I think, Jeremiah, we're doing some scanning stuff, both for Thinkorswim and costs and metastock, just kind of the basics, but this kind of gets you into the mode of being able to identify or implement the scans for the software that you're using. And I get thinkorswim to scan for the 12 main candlestick signals and patterns. Yes. Yes, and we do have the formulas on the website. If you go to candlestickforum.com, over in the left-hand column, you should see TC2000 formulas. Brad, that's all right. I think Sandy gets me mixed up with one of her old boyfriends, and she's always calling me Goober. Okay. All right, I guess no more questions. Jim, go ahead and do the double line. And then 3.8 seconds to the next double line. Oops, now I've got to stop the scrolling. Okay, CERN. Nothing to do here except stay long with your stop below the T-line. Melly. Same scenario. Nothing, I wouldn't be a buyer here, but if I was long, I would just stay long. Baba had a nice J-hook type pattern. Yes, you can be buying this one. Notice where the J-hook pattern supported, right smack dab off the 50. So wave 1, wave 3 should take you back up to fill this gap right in here. Kevin, get ready to short this one. Again, the oils look like they can be shorted. Lighting also. SYBX. Nothing there, Rick. You do have a bullish engulfing, but you definitely need to get back up. That's just not a very good looking chart. There's no trend to it. Kendai. That's not a very exciting looking chart either. You do have a fry pan bottom, but the magnitude of your return is not going to be real enthusiastic. You can stay long as it stays above the T-line because of the fry pan bottom. This wouldn't be one of my first picks to get into. CTVA, another J-hook pattern with the prospect of it coming up back to the top of the trend channel. Again, when you can see kind of a parallel line, that's what everybody else can see. That's kind of a wedge formation. You can buy this one on positive trading if it breaks out through the top of this little wedge. Weight watchers, stay long on this fry pan bottom. MDR, you stay long on this as long as your 45-degree J-hook bobble breakout is in progress. PAL, nothing wildly exciting on this one. If you like it, you can be buying it with the prospect that it's coming back up to the top of the trend channel. But as you can see, it doesn't have a real dynamic trend right now until it gets back up to the top of this channel and can break out. Paradigm, I know the same scenario. Should be going back up toward the top of the channel, up in this range. AEO, you can start buying this one. It's basing. Just be aware of what happens when it gets to the 50, which is also this level right here. ULYS, another one that if it opens positive, it's breaking this little resistance level. You can be going after that a little bit more aggressively. Alta, another one that really needs to break out through this level. If you're long, stay long. If you're looking to go long, look for a bullish doji sandwich and then see it break out through here. US Steel had a good little pattern. You can buy this one on positive trading. Also anticipating this coming back up to the channel area. Blue, we did. It's got one of the fry pan bottom setups. If you're buying this one, just be aware of what happens if it gets up to the 50. R, J-hook pattern, you can buy this one. Good looking chart. Notice all the tails to the downside, and they come back up above the T-line. That's pretty good evidence that they didn't want to sell it off or they couldn't sell it off, and the T-line acted as a support level. Kroger isn't really that dynamic anymore. I probably wouldn't be long or short this one. It could take it a while just to get back up to whatever that would be, a 6% return back up to the 50. And Carnival, you can be buying this one also with the idea that the first target is here, second target is here, third target is filling the gap. You have candlestick pattern signal screeners for Pro. Not that I know of. I know we've got it for Ninja, for TradeStation, Thinkorswim. I don't know whether we've got it for E-Trade or not. Metastock, PC 2000. Oh, there's one or two more, but I can't think of what they are. Square, stay long. Notice the breakout. Notice your hanging man. Have your safety stop at today's low. It shouldn't come back down through that level. Babo, we did. J-hook pattern. You can be buying this one. HBI. Nothing wildly exciting. Yeah. I wouldn't be short, but I wouldn't be long on this one. Dropbox. Just stay long. The little wedge formation breakout. Wave 1, wave 2. You're in wave 3. Use the safety stop at the T-line area. Zixi, having a hard time getting through this level, which means they might be coming back down here to test the 50. If I was long and it opened lower, I'd close it out. Wouldn't pay attention to it until it broke out through that level. Yeah, you probably should have closed this one today, even though it closed right on the T-line. So if you didn't, to stay in it, you definitely want to see it open positive tomorrow. ZS, just stay long as that stays above the T-line. Zillow, you don't have a sell signal here. You have selling. And what gave you the clue that you might see some selling? Because look where they gapped it up in the overbought condition. Anytime you see that gap up in the overbought condition, where would your safety stop have been? Right there. If it came back down through there, where do you think they were taking it? Back to the T-line. If it didn't close below the T-line, you need to see it open positive and trade positive. Notice that this is not a sell signal. This one is. This tells me that if this opens lower tomorrow, you close it out immediately. This is your message. Notice your doji inverted hammer gap up. So what's your message tell you? That you can start buying this once you see the selling has stopped. So you're essentially looking for a buy signal. And the socks, J-hook pattern, left-right combo, stay long. Look for it to break out through here. If it breaks out through there, now you've got wave 1, wave 3 bringing you back up into this area. Lift. You can stay long on this. Want to see it break out, though, through this level. And QCOM. You need some more confirmation. Notice your kind of your belt hold. Bearish belt hold told you the selling, the buying had stopped. After it kind of filled this gap, you can get ready to buy it. But remember, you don't have a real strong sell or buy signal, and your stochastics aren't in the sold area just yet. So that was a long dissertation to say I'd probably be someplace else. There's better charts. SID, if you still like it, you can stay long. It also needs to break out. Disney is probably something where, because of the breakout through this area, you might have a steady eddy. And that's also going to be a function. Yeah, so I'd be buying this one on strength, and right now it might be just above that level, because that seems to be a little resistance level. But if it goes up through there, might have a steady eddy type uptrend. NMIH. This one you should have been out of. I wouldn't be long or short. So this is one of those situations where if you bought here or even bought here, it shouldn't have come back down through the T-line. In Humana, you got up here to the 200. You gapped up there to get there. If this opens lower tomorrow after the bearish Harami, close it out. It's coming back to the T-line. Let's see, we did ZS. All you can do here is stay long as this got a little morning star signal, which tells you right now they're staying above the T-line. Okay. I have an idea, and again, you shouldn't listen to me, but there's very few times where I think in the overall market conditions you can really get bullish. The fact that we've broken out through that resistance level over the last 18 months puts us in a position where might see wave 3 in progress. And if that's the case, there's tons of good chart patterns out there that are going to put you in situations where you can make some, that's right, make hay while the sun shines. So with that, everybody have a good evening. We will see you bright and early in the chat rooms tomorrow. We'll see you then.